Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, April 25th, 2008. Well, we're going to talk a little bit about some technical analysis today, some tools, some price pattern time issues out there. It's a little psychology, as we always like to throw in, because psychology, as we've seen, has been such a key in the market lately. And again, price pattern and time really lead the pack. You put those three things together with the psychology aspect of the market, and it's our belief that you add in our proprietary analysis techniques, and you can pinpoint days that are key in the market, whether it's a reversal day, a pivot day, or whether or not it's going to be a mega move up or down, and we will know about it. All right, with a very, very tight accuracy point. And that's why we like to do the consulting, as mentioned, to so many hedge funds and institutional clients, and even some of the private clients that we hold now. It's such a key to know that when the market's going to react like it is, when it's going to jump up huge, or when it's setting up for a monster move based on the proprietary techniques we've developed. So again, let's get right into it. I want to really get focused in on this. And what you can see here is this is the market in the intraday 10-minute period on the ES futures. And again, this is the June '08 contract for the S&P 500. Now, what you can see here is that early in the day, and this is going back to as early as 4 or 5 a.m., the market was creeping up. Now, whenever it creeps into the open, it's a very standard, well, I wouldn't say standard, but oftentimes you see a reversal in the market because what happens here is as the market creeps higher, the average investor gets more bullish. And this is on an intraday level now. And obviously this holds true on the daily, but in a longer time frame. Now, as you move up into the open here, it's very likely you're going to see what we call as a gap fill if the market gaps up a little bit. And what that is usually is a point where the market sells off to basically go down to the flat line or even slightly negative to kind of scare the investor, the amateur investor, out of the long positions that they were building here. All right, you get everyone confident it's going to be an up day by this rising into the open. The market opens right here, or right here was 9 o'clock, 9:30 when the market opens, and look at the sell that ensued. You had a strong push down, a little bounce into the 20 moving average, another hard push down, and then this is where the beautiful chart pattern appears. You guys know by now what type of chart this is. Look at this. What a bottoming tail there. You don't get a better bottoming tail than that. And right off of that, you basically can either buy at the close of that candle for the next push up, or oftentimes, if you're a little more safe an investor or a trader, you wait for a break of the high of that candle, which would have been on this candle. You see that candle close basically flat, but the next candle took off to the upside right there. Now, the beauty of this is that it's set up for a bullish position, and we call this to a T in the chat room, and we said, watch this pattern, because this is a very bullish pattern. You had sideways to slightly down consolidation, and you guys will remember, this is the same pattern that we saw in the markets developing after the bottom was put in with Bear Stearns. You had the bounce back up, and then the sideways to slowly down consolidation before the next break up, and it worked like a T. Look at how it settles right back on this 200 moving average on the intraday, and off to the races you go. And this rally late in the day was extremely powerful, especially late in the day when you see the volume really kick in. This whole period was extremely light in volume, but look at when we draw this in here, all the way up here, this is where that period was. So you basically had from this period on was very light volume in the intraday, middle of the day period, but starting right around 2:33, the volume picked up immensely. And that's when you got that power move up right here into the close. So again, a very nice move up in the markets, and we just taking a look at the markets overall, we saw the Dow up 42, almost 43 points, the Nasdaq down just 6 points on the day, and the S&P was up 9 points, or over 0.5%, almost 0.65% there. Now, many of you might say, well, why was the Nasdaq down? And there are really two reasons. And if these two stocks were up today, the Nasdaq would have been positive, no doubt in my mind. And the first stock is Microsoft, MSFT. All right, Microsoft here, and we'll go to the intraday chart, and you can see basically hovered on the lower end of its range all day long. All right, here's where it closed yesterday, right into earnings, and you guys know how we talked about this stock, right? You can see on the daily, look at that move up into earnings. It's a dead giveaway that it's well overbought here, factoring in immense earnings. It would have to come out like Superman beating earnings here. Otherwise, it was going to sell off, and it came out with good earnings, but you know what? It wasn't good enough, and it sells off. So going back to the intraday, and this is the daily, all right? So you see again the big move up, and then sell off on earnings. And here's the intraday from yesterday's close to today's close, and in tune with that, when you have Microsoft, a large cap, such an immensely traded stock, such a large market cap stock, down $2 on the day, it's going to take the Nasdaq down because there is a percentage in there that affects the Nasdaq, and you'll have a loss on the Nasdaq just because of that. In addition, the other stock that was a little weak today was Research in Motion. Here's where it closed yesterday, and here's where it closed today, and you can see the drop in that market, in that stock, excuse me. Now, again, Research in Motion was not a big drop. It was just a small drop, but it's one of those large cap tech plays that really can have an impact on the market because of its weighting in the Nasdaq and so forth. So even though Research in Motion has had one of the best moves out there and been an extremely successful stock and a major run-up from here all the way up to here, it's sitting right on that 20, and that's fine. It actually closed above the 20, which is a good sign. Closed off the lows. As you can see, here's the low on that, on Research in Motion, and here's where it closed. Down here's the low. This is where it closed for a nice rebound late in the day on that rally. And again, guys, look at these patterns. These patterns repeat themselves. Now, it's not the end-all or be-all because obviously we've developed these proprietary techniques and calculations and mathematical formulas, geometrical shapes, and so forth. But you know what? If you want to just look at the bottoming tail right there, what a bottoming tail again. Even if you wait till the break of that high, you bought right here, and you ride that thing up beautifully. Even if you were a conservative investor, you sell on the move back to the 20 moving average for a quick scalp from here to here, which is a nice day trade nonetheless. Or those of you that are a little more bullish, or a little, hold positions a little longer, you wait for it to move up all the way into this area until you get that little bit of a pullback or a little bit of a topping tail there. Not a real topping tail, but a bearish candle nonetheless. All right, so enough about that. So ideally what I'm saying here, folks, is if those two stocks were positive, you would have had the Nasdaq joining the parade today for the third consecutive up day. Instead, it lost about 6 points, which is nothing, to say the least. Now let's flip back to the ES future chart, and we're going to go to the SPY and so forth, and we want to talk a little bit about this last little move up that we're expecting in the markets that's been coming to fruition as we had talked about and predicted. All right, again, this is the daily, and you see when Bear Stearns came out, obviously you had now let's go to the SPY here, in fact. Bear Stearns comes out here. This is when the market, we call the bottom, obviously. You had the beautiful move up, the retrace, and right here is where everyone went bearish and where we stayed bullish and said, guys, this is just a fake out of the weak hands. Sure enough, that's exactly what it was. Now you had a little consolidation, and now that final little move up. Now, it may last through next week. It's possible, but we do expect some choppiness. You got the Fed meeting next week, I believe, and they're going to do their interest rate type deal. You have some more earnings next week as well, and this market is nearing the end of its run. There's no doubt about it. It still has a little more gas in the tank, we feel, but it's going to be choppy at this stage. And this is, if you were an investor that bought on our recommendation here, we'd be saying, you know what, this is where you're starting to take off profits off the table, slowly unwind your positions. We may go as high as here or even as high as the 200, but in this area from now until next week, you want to be unloading your positions into this powerful move up or this last little move up. All right. So again, we'll watch for that. Once we get the turn date, now we are seeing, as I mentioned in the last couple videos, we have a turn date for a sell in the markets where we're going to see another pretty hard downdraft. It's not going to be, it may not be as what we saw, like right here, or the craziness of that situation, but you're still going to see probably a move back at least down to this point here, one of these points right in this area here, and it's very even possible that we could see a move back to this point down here, but that might be stretching it a little bit. Let's take one step at a time and look for somewhere in this range, a sell-off after we get up to this area right around here, okay? And then once we get here, we'll reevaluate. We're going to see some solid support right along here. As you can see, this line right here matches up with this point and this point, which is great support on the markets. And should we break that, then obviously we'll start looking at the next support line, which would be right around here on the daily, or even somewhere in between right around there. Okay? Let's look at the Nasdaq quickly right before we end the video for the weekend, folks. And same thing applies. You can see the Nasdaq having the little couple day of consolidation, and the Nasdaq's actually been trying to move even more here, even though it did have a couple point pullback today. But nonetheless, it's nearing the end. The head and shoulder pattern that we had pointed out a couple videos about 2 or 3 weeks ago came to fruition with the head, inverse head and shoulders. You had a shoulder, head, and then the shoulder right here. And once you broke that neckline, which was right around there, you can see the move up that ensued. Now, one thing interesting I want to point out here, guys, is that we broke that neckline right there, right here on the move up, and then you retraced back down. But look, you basically used that line as support now. A broken resistance line to the upside becomes support on the downside. So when a stock comes down or a market comes down into that neckline break of the head and shoulders that it broke, that will be support now. And as you see, it's moved right off of that line and up a little bit. Again, the Nasdaq could go as high as here, but it's more of a time issue right now that we're looking at. All right, you have a price pattern in time, our key levels here. The patterns have worked beautifully, and this is what we've saw. The pattern is the inverse head and shoulders. It's consolidation patterns. It's the mathematical formulas we used in our calculations. Time now is becoming key as we're seeing a key turn date coming towards the end of May, the end of April, early May. It's looking more and more like the early May area, but we'll pinpoint that next week in the videos. Alright guys, come join the chat room. Come join the swing trade alerts, the options alerts. Institutions, get on board before our time gets filled up. We'll talk to you soon. Have a wonderful week.